Stretch, STRC, the preferred variable dividend stock from Microstrategy, has been consuming the majority of my brain power recently. I think it's the most interesting thing that's going on. And it's helpful for me to keep repeating the train of thought that got us here. Okay. So Bitcoin focused investor since 2015, real estate focused investor since 2019. I like the barbell approach of that. Bitcoin is the hyper growth, hyper volatile asset. Real estate is the slow moving, slow growing cash flow engine that it is, right? And so I like the barbell approach of that. Also, through that whole time, was working at Bitcoin related Bitcoin financial services companies, right? Just recently stopped doing that, and that turned a setting in my head to where now I'm focused on income investing. I'm the most kind of defensive income generating focused that I've ever been. Up until now, I've always been buy the dip, hyper aggressive, stack the Bitcoin number again, but always having this anchor of the real estate. Okay. So that's what brought us to this point. Then what's the main way to, so then when you become an income focused investor, what happens? Well, when you're also a Bitcoin focused investor, the concept of buying regular stocks that send a dividend seems extremely boring. And not only extremely boring, it just seems it's just really hard to trust that. Because companies that are operating fully on fiat, they just there's no other way to say it. I honestly kind of look down on the CEOs and employees of those companies. I can't get myself to be you're not, if your company fully only has to do with USD and that's your only marker, I'm sorry, I'm not bullish on the underlying fundamentals of what you're doing. And that doesn't mean I might not like your product. I might eat your food. I might use your phones. I might do whatever. But it just from an investing standpoint, I'm just not convinced on the economics of your company if you haven't rationalized what's going on with monetary debasement. Okay. So that narrows it down really fast, right? So I want to stay Bitcoin focused and I want to have income, right? That immediately turns you into, there's a niche of income investing that's basically ETF covered call funds. So there's ETF covered call funds, and what they do is they use the up and down volatility of the underlying asset to then sell covered calls. You collect the premium. And so what are you doing? You're selling away some of the upside of the hyper volatile, hyper growth asset, collecting income, and then you have a hybrid of growth and income. Perfect. So hunted around that entire area, arrived on BTCI. BTCI is my favorite version of that type of generating income. Still use it, still love it, still stacking it. Okay. Also, then what happened? Was Strategy released preferred stocks. Okay. And that gets in the weeds of how does a company even get formed? How are there different layers of stocks, right? You think learning about Bitcoin is hard. Learning about corporate finance and the guts and weeds of that is also hard. And speaking of trying to learn new things, here's something I've been getting better at, and it's rotating between AI chatbots. One of them that I have in the mix for me is the sponsor of today's video. I'm very excited about it. It's Venice AI. Venice AI was founded by crypto OG and entrepreneur, you probably heard of him, Eric Voorhees. And I love supporting them, getting the word out about Venice AI. So here's a look behind the scenes of me asking Venice AI about how the MicroStrategy Bitcoin yield curve works. And here's the thing. Sam Altman said on a recent podcast interview, there currently aren't any legal protections for the conversations that you're having with AI chatbots, the way that you would with a lawyer or a doctor or a therapist. That's the exact high level reason why it's important to me to not get married to any one AI chatbot tool and why you should try out Venice AI. You should build the tool and the skill of being able to rotate between them. Venice runs the leading open source models, and your convos are encrypted and private and only stored on your device. The Venice Pro plan comes with additional features like being able to upload PDFs for instant full summaries. Go to venice.ai Brian Harrington and enter code Brian Harrington for 20% off a pro plan. But so there's basically two classifications of stock. One is common, one is preferred. And they come with different settings and different features. Like common stock, you're allowed to vote on who the board is. And in theory, the value of the company should accrue to that common stock, right? Preferred stocks act a lot more like debt because they pay a dividend, and then there's a lot of focus on like where are they in the ranking as far as who gets paid out first as far as dividends go, and who gets paid out first in the result of a bankruptcy. Okay. So that's loosely on common versus preferred. Preferreds for a long time have kind of just been this wonky side thing that regular like investors don't really ever think about. Only like, again, institutional and fancy investors ever really think about that, right? So strategy has now made preferreds interesting to regular people. They were the first preferred stocks listed on Robinhood, and they released 4 different versions of these in 2025. So, because I became an income investor in September of 2025, I am like lagging this story, all right? And I don't mind actually lagging this story. I kind of like being, I haven't been like a MicroStrategy, bull for years now. I haven't. I'm kind of purposely lagging about 6-12 months behind kind of the cutting edge. I'm catching up a little bit, as we'll talk about with STRC today. But I want people to understand that. Though, like this, the thought train of what brought us here, I think is important for the context, because I'm not coming here as like I love Saylor, I love strategy, I love everything they're doing to the moon, like that kind of stuff. I'm becoming that a little bit. I can feel that growing inside me because I like the competitiveness of when you listen to the third quarter earnings call, the most recent earnings call, which is kind of where I've hopped aboard this train, is they talk about how they want to be the largest corporate treasury in the United States. They want to knock off Berkshire Hathaway. And I'm like, that logically follows. It logically follows that as Bitcoin grows and grows and grows, a person like Saylor will become the new Warren Buffett, and people will kind of look to them as the new value investor, which I agree with all that. I think Bitcoin is value investing. And I think the dividend stocks from MicroStrategy are proving this more than ever. One more thought on the philosophy of dividend stocks and how it relates back to the covered call funds, and then we'll get into the guts of how STRC works in the settings and why I think it's a good buy under $99. The strategy preferred stocks are proving that companies that nail how preferred stocks and making them interesting to regular people are going to force two things. They're going to force other Bitcoin treasury companies and force other companies in general to have to start paying dividends, because if you are a growth company and you're growing less than the rate of Bitcoin and you're not paying dividends, then you're kind of stuck in no man's land. And now this is really only relevant, this is only visible and identifiable by Bitcoin focused investors right now. But that's why this seed of the strategy preferred stocks is so radical, because if they do work and if they do catch fire and investors start to use these stocks a lot more and start to pull money out of other stocks, companies that are trying to be growth stocks are really caught in no man's land. Because to be a growth stock, you're either going to have to grow faster than Bitcoin then to be truly growth, or you're going to have to pay a dividend, and I'm going to pay to get the income. And so what these preferred stocks are doing is it really is kind of forcing Bitcoin as the real hurdle rate, as the real index. Like Bitcoin is the real index, and the S&P 500 is going to continue to get pressure on it as Bitcoin is becoming the new index. Okay, so that's enough about the philosophy. Preferred stocks pay dividends, covered call funds sell off the upside to collect a premium. Okay, and so I like both of those kinds of income, and I like diversifying the types of income in my new Bitcoin income portfolio. So stretch. Why stretch specifically right now is a good opportunity. BTCI will always be there. The covered call funds will always be there. This moment right now, while the market is learning how to understand stretch and how to understand these preferred stocks from strategy, when it's under $99, you have a double benefit. you're getting paid the 10.5% dividend, but you also are riding the train as it floats back up to par value. Okay. So when it trades under 99, the company has the opportunity to raise the dividend. When it trades over 101, the company has the opportunity to lower the dividend. And then they also have a call option to at any time buy back shares from the market at 101. Those are the main mechanisms that they have to help STRC trade at par. So right now, when we don't know if Bitcoin is going into a bear market or a bull market. And as if you're like me, and this is your third month of income investing, and you're kind of feeling the pivot of you've been Bitcoin focused, but you want to become more of an income investor, Stretch is the perfect thing to start with, honestly. Again, if you've already dipped your toes in the water at BTCI, it's still there. Like covered calls on Bitcoin, that's a thing. It's always going to be there. But as you've noticed, BTCI floats up and down on the price of Bitcoin. And so it's for you to choose how much floating up and down on the price of Bitcoin do you want while getting paid? Or how much sitting in the par range of 99 to 101 do you want while you get paid less? Okay, so BTCI pays about 27% distribution. Stretch is targeting 10.5% distribution right now. I feel like they're going to increase it next month to help it get into the 99 to 101 a little bit. But even if they don't, the market forces are still pulling it into par range. And so when you're able to buy Stretch under 99, you are going to benefit from it floating up into par. That's the main thing. That's the main, if you take one thing away, it's when you are buying Stretch under 99, you are getting the double benefit of getting paid the monthly dividend and being on the side of market forces that are floating it back up into par. Okay. So that's the double benefit. And it's really if you don't have anything else to do, or if you're confused, or if you don't like your other options, consensus is building that Stretch is just a great default position. Stretch is a great default position. And here's the other radical thing. I can't get away from the philosophy, guys. I love the philosophy of this. I love the social economics of just what Bitcoin's doing in the world. Stretch is attacking government money markets. If you open up a Fidelity account right now, when I open up Fidelity, my base unit is not dollars. The base unit is a thing called SPACs, which is a government money market. So your base unit is loaning money to the government, and then they pay you a distribution, okay? Sailor and Strategy is being they're effectively literally saying, don't lend money to them, lend money to us. Now, stock, it's not lending, it's not exactly lending, but these preferred shares are blurring the lines between government money markets, private money markets, because here's another thing. There's another fancy underground market called private credit. You know how I've been telling you guys that I've been calling different financial advisors and asking them about income investing to just feel kind of what's the alternative? They immediately bring up private credit. When they hear the amount of monthly income that I want to make, they say, well, your only option is private credit. Really, your only option is private credit. Now, when you listen to Sailor talk about private credit, how private credit is illiquid and it's hard to get a hold of, and it's very underground, only for fancy finance people, okay? But they're putting Stretch, STRC, in everyone's regular phone. So it's in Robinhood, it's in Schwab, it's in Fidelity, and it's not hidden behind random weird ticker symbols or QSIP symbols or whatever. It's just you type in STRC and you can find it, and you can get paid more than a bank account, more than a government money market, and market forces will force it back up to trade at par. And so that's why it's been eating my brain so much. That this opportunity right now, where the market is realizing that Strategy is serious and they are going to help it trade at par, you have the ability to get paid as that happens.